Everyone, we are here with a new series to discuss the auditing standards which have been made applicable for May 24 and onwards examination. The first one which we are going to pick is SA 800, which deals with special considerations, audits of financial statements prepared in accordance with special purpose framework. So we are going to discuss two things. Okay, first is what does special purpose framework mean? Another, how are we going to audit the financial statement prepared as per such framework? So what are the things that SA 800 is going to address? It is going to address the acceptance of the engagement, the planning, as well as the performance of the engagement, and last, the forming an opinion on the financial statement, but not for the purpose of expressing an opinion on the effectiveness of internal control. Three things. One is acceptance, planning and performance, and forming an opinion and reporting on the financial statement. But here the main point is we are not going to comment upon the effectiveness of the internal control. Okay, what does special purpose framework mean? It has been defined under SA 800. It means a financial reporting framework designed to meet the financial information needs of a specified user. Who could be a specified user? For example, you're going to give a financial statement for the purpose of getting the loan from a bank institution. Then such financial statement will be useful for a specific user, say the bank or the financial institution. So that will be known as special purpose framework. It could either be a fair presentation framework or a compliance framework. Fair presentation, we give an opinion called as true and fair view, right? Then the requirements of the applicable financial reporting statement framework determine the form as well as the content of the financial statement and what constitutes a complete set of financial statement. For example, somebody need not have cash flow statement will not be necessary. Okay, they are happy with balance sheet and P&L. So for the purpose of special purpose framework, it is based on the intention of the specified user. The main key here would be the intention of the specified user. Example of special purpose framework. One, you are using a cash system of accounting and preparing a financial statement as per the requirement of the creditor. Okay, they're checking your cash receipts and cash disbursements. Then the financial reporting framework which has been established by the regulator. For example, the IT gives a specified format of P&L, right? So that could be an example. I'm not saying that is an example, but it could be an example. Then the financial reporting provisions of a contract such as bond, indenture, loan agreement, or a project grant. Special purpose framework is to be distinguished from a general purpose framework. General purpose framework is such that anybody who's having the ability to read the financial statement is able to understand the financial statement. That is for a common people. That is a general purpose framework, while special purpose framework is for a specified or intended user. Then considerations when accepting such engagement. What are things you have to keep in mind when accepting an special purpose framework audit engagement? Okay, first thing, to decide whether to accept or not, whether the financial reporting framework is acceptable or not, you have to understand the intention of the specified user. Somebody could need, okay, the creditors could need whether your cash flows will be the key concern for a creditors, right? So the cash receipts and cash disbursements would be the key factor in determining the acceptability of the financial reporting framework. There should be a transparent process, an established process. Established means documented process. There should not be like, I will do this, I will do that for some accounts, I will do this for some accounts. No, there should be a followed, prescribed procedure which is well documented, and that process should be transparent. And whenever there is no objections, say for example, there is no indicators which is saying that this opinion could be wrong. Then what you give an unmodified opinion, right? Similarly here, in the absence of any indication to the contrary, such as financial reporting framework is presumed acceptable for a purpose, special purpose financial statement prepared by such entity. And then, where the financial reporting framework referred to above, supplemented by laws or regulatory requirements, SA 210 requires an auditor to determine whether there are any conflicts between the financial reporting standards and the additional requirements exist and prescribes actions to be taken by the auditor if such conflicts exist. Say example, there is a requirement which says the purchase taxes should not be included in the purchases, okay, but you are including in purchases. There is a regulatory requirement, but you are contradicting to that requirement. Then such contraventions or conflicts should be checked by the auditor, and prescribed actions are to be taken. The applicable financial reporting framework may encompass the financial reporting provisions of a contract or other than those described in the preceding paragraph. In that case, acceptability of a financial reporting framework in the circumstance of an engagement is determined by the framework, whether it is actually acceptable and not generally accepted or not. Okay. Then everything here in the special purpose framework is a matter of professional judgment. Is a matter of professional judgment. For example, let's take an example. For the purpose of general purpose framework, we have something, some formula called as expected credit loss to anticipate the bad debts that could be occurring, right? But while preparing a financial statement for the purpose of estimating the value of net asset at the date of sale, okay, then you will be very sure of these bad debts will occur and these bad debts will not occur, and then you will not go with expected credit loss method. Instead, you will go with a more prudent method, okay? And that could not be neutral, okay? We are more favoritism towards less bad debts, right? Clear? See, let me repeat it again. For general purpose framework, we use something called as expected credit loss method to estimate the bad debts and provision for bad debts, okay? Bad and doubtful debts. But whenever you're using special purpose framework, you will be giving a more prudent estimate of what the allowance could be, because you know these are the amounts that will not be receivable. Certain things I could receive with some efforts, okay? So for the purpose of establishing the value of net asset of an entity at the date of sale, this will be a more prudent value, and then this is not a neutral approach, right? That is a neutral approach, but this is more sensible one rather than neutral one. Considerations when planning and performing such audit. SA 200 requires an auditor to comply with what are things? One is ethical requirements. Whenever an auditor steps into some work, he is bound to be ethical. Okay. That ethical requirement here includes independence. Okay. All essays relevant to the audit have to be followed by the auditor. Okay. If an entire essay is not relevant or that essay is conditional and the condition does not even exist, then you can ignore such essay. In exceptional circumstances, if you find there is something which is making it necessary to depart from the particular requirement of an essay, you can do so by performing alternative audit procedures. Application of some of the requirements of essay in an audit for special purpose financial statement may require specific consideration by the auditor. For example, SA 320 judgments about the matter that are material to the users of the financial statement are based upon the consideration of the common financial needs. See, for example, if you are providing a financial statement on a general purpose financial statements, then what happens is that sales will be key, profit will be key, assets, property, plant and equipment will be key, inventories will be key. So your materiality will be based upon these factors, okay? But for something like cash system of accounting, where is the key? The cash receipts and cash disbursements will be the key. So you have to base your materiality based on that particular item, which is very much important to the users of this, specific users, okay? The intention of the creditor is not the cash movements, right? So your materiality should also be based upon the cash movements. Okay. Then, for example, there is another case. Your contract specifically states that any misstatement below rupees 1 lakh is to be ignored. So your client makes lots of mistakes below 1 lakh. Okay, different items he makes some mistakes of, errors or frauds. Frauds is different, but errors. Okay, of less than rupees 1 lakh. What do you do? You will say, contract itself said that any amounts below 1 lakh are to be ignored. So I'm going to ignore this. Can you say this? Strictly no. You cannot say this. You have to determine your materiality. The materiality need not be as safe as what is mentioned in the contract. Okay, and since there is a threshold, any amount which is less than 1 lakh is to be ignored as specified in the contract. You cannot say that since it was less than 1 lakh, I ignored it. No, that doesn't relieve your responsibility. See, that's what mentioned here. The existence of such threshold does not relieve the auditor from the requirement to determine the materiality in accordance with SA 320 for the purpose of planning and performing the audit of special purpose financial statement. SA 260 the auditor to determine the appropriate persons within the entity's governance structure to whom to communicate. Communication with those child governance, right? That is for general purpose financial statement. But for in some cases that TCWG will not be handling the special purpose financial statement. There could be a separate finance department which is going to do all the works related to getting financial assistance from the bank. Okay, so that particular department will be the TCWG for this purpose of special purpose framework. Okay, then forming an opinion and reporting consideration in such audit. When forming an opinion and reporting on special purpose financial statement, the auditor shall apply the requirements of revised SA 700. Now, let's move on. What are the description of the AFRF? What are the description to be given for the AFRF? SA 700 requires the auditor to evaluate whether the financial statement adequately refer to or describe the AFRF. Okay. That could be, for example, there are some significant interpretations have been given in the contract that has been known again, made publicly available for the intended users. Then that will be forming part of description of the AFRF. Along with that, it also deals with form and content of the auditor's report. In the case of auditor's report on special purpose financial statement, the auditor's report shall describe the purpose for which the financial statements are prepared and, if necessary, the intended users, or refer to a note in the special purpose financial statement that contains information. For example, you are giving a note that for the purpose of availing credit of more than 3 months, I am going to prepare this financial statement for the and the intended user will be XYZ Limited, the proposed creditor. Okay. The next point, if the management has a choice of financial reporting framework in the presentation of such preparation of such financial statement, the explanation of the management's responsibility for the financial statement shall also make a reference to its responsibility for determining that the applicable financial reporting framework is acceptable in circumstances. So there is no particular thing which has been given, okay, in the contract, okay, but they need a financial statement. Okay, see, for example, the creditor needs your financial statement. There is no particular thing which is mentioned that as you should follow only cash system of accounting for the purpose of this financial statement. So what you will do, you can either prepare cash system of accounting or the accrual system of accounting. But you understand the intention of the creditor is to analyze your cash flows. Okay, so you preferred cash system of accounting. That's where it is. You have to justify. That is, this of management's responsibility statement should justify the reason as to why this particular financial reporting framework is acceptable. Okay, then alerting the readers that financial statements are prepared in accordance with special purpose framework. The special purpose framework may be used for the purpose other than for which they have been intended, right? That could be a misleading one. So it is the auditor's responsibility to alert the use of the auditor's report that the financial statements have been prepared for so and so specified purposes, and it is not suitable for any other purposes. And last point here would be restriction on distribution or use. In addition, you have already alerted, okay, the intended users, but there is no such prohibition that you cannot restrict the use, right? There's no regulation that says that you cannot restrict the use. Okay? But so you can inform or indicate the auditor's report is intended for specific users. Say, for example, the XYZ Limited, the creditor. Okay, depending on the law or regulation applicable, this will be achieved by restricting the distribution or use of the auditor's report. In these circumstances, the paragraph alerting the readers may be expanded to include these matters, and the heading can be modified accordingly. Okay, we have 2 questions here. Let's see that. CA Anusha is an auditor of a company. She is also offered a professional work of the audit of a financial statement prepared specifically for meeting the requirements of a loan arrangement for the same period. She chooses to accept the work and has made up her mind to disclose this fact or other matter paragraph in the auditor's report to be issued by her for the specific engagement. Is her approach proper? What do you think so? Let me give you 1 minute. Yes, you are right. She can do so. Her approach is proper because she is she has accepted the engagement of special purpose framework and she is also ready to disclose the fact in the other matter paragraph. Okay. Let's move on to the next question. CA Lakshmi has prepared a draft audit report for financial statements of X Limited prepared in accordance with the financial reporting provisions of a contract with Y Limited. She has drafted an unmodified opinion to be given in the auditor's report. Besides, she has also drawn attention in the draft audit report to a note A to the financial statement which describes the basis of accounting. How should she ensure that the report would not be misused? Draft a suitable paragraph and to be included in the report for the purpose. What are two things to be done? One is alerting the users that it is for a specified purpose and restriction on the distribution and use, right? So let's see that. See here. Basis of accounting and restriction on distribution of use. The paragraph will be as under. Without modifying our opinion, we draw attention to note A to the financial statement which describes the basis of accounting. The financial statements are prepared to assist the company to comply with the financial reporting provisions of the contract referred to above. As a result, the financial statements may not be suitable for another purposes. Our report is intended solely for X Limited and Y Limited and should not be distributed to or used by parties other than X Limited and Y Limited. Cleared. So with this we have completed SA 800. Stay tuned for more such videos. Thank you.